And after last week's series of rough data, all right, and then some topsy-turvy headlines about discussions this week maybe being a little bit more tense than bulls were hoping for, I'm looking at a pretty quiet Treasury market today.
Yeah, very quiet market. I mean, really nothing new to change the fundamental landscape, that's for sure. And when that happens, we get that bearish tendency into the market, just given the fact that the market's been so overbought for so long. But, you know, it makes sense when you have 30s near 1.5 and, 10s near 1.5 and 30s near 2, that there's going to be a lot of demand for them right now.
So, Larry, I've been sort of developing my chops here as a technical chart watcher over the past couple of years, right? So when I look to, you know, the big Fed and central bank trades, you know, we saw BTC get slammed off its highs. Gold is in like this short-term lower highs trend, and, you know, bonds are right at their high, but it almost looks on the 30-day chart like we're coming up short of the last high. So walk me through what it means to you as a trader. When the data comes in bad, the cut comes in for October, but yet bonds are actually trading below where they were in August before all the bad data came.
Yeah, that's a great point. And I think really silence is golden. Silence actually is telling also. I mean, it seems like the Fed almost wants the market to dictate what the next cut's going to be or how much the next cut's going to be. And not to throw stones at the Fed. I mean, they're in a really tough spot right now. But the fact of the matter is there's no concerted Fed speak to manage expectations, just like in September. So, you know, honestly speaking, I think the Fed officials are just as off guard as we are right now with how the next 3 months are going to unfold and what they're going to do about it. I mean, I almost feel like I'm more confident than they are, only because I have money on the line, but I do believe we'll see an October cut. But beyond that, when you have decent data, inflation is almost where it needs to be. It almost doesn't make sense. And we heard that over the weekend by the Boston Fed governor, where we shouldn't have a rate cut.
So this is what's so interesting now, right, Larry, is that we've got some rough data, but 2 months basically of beating expectations. So to me, it's almost like, is the chart of bonds and possibly gold too, maybe telling us that the expectations for how bad this scenario was going to get, or how many cuts we would need, you know, beyond the rest of this year? Is it possible that maybe we got overdone? I mean, look, I think trade's a huge wild card here. If it goes south, you probably get a huge rush back into both these assets. But I mean, what do you say, Larry? If we don't start making new highs in bonds soon, how do we assess where the trend goes?
Well, I think it's a couple different issues. Like with regard to gold, I mean, I think it's really just exhaustion, like buyer's exhaustion. Maybe that's just short term. I mean, we just read what Friday, ETF buying was at a 6.5-year high, despite any kind of hawkish overtones that we heard over the weekend. So I think we might just seeing some buying exhaustion. With regards to treasuries, I mean, it didn't make sense to see the 210 trade the way it traded today. Expecting more flattening from the trade, didn't get that. It's not trading with any kind of like fundamental integrity, as it were, nor is it trading with any kind of technical fortitude. It just seems like everybody is out to lunch right now. Nobody knows what to make of it. And you're right. Like you look at the copper 10-year ratio doesn't make sense. Neither does the gold 10-year ratio. So I think a lot of it's going to be telling, unfolding, especially as we see CPI numbers come out on Thursday. Yeah.
So Larry, I had a hypothetical around the last couple of Fed meetings, which is if Powell disappoints and the bond market sells off anyway, then you probably have to think about the bond market as being highly speculative. I'm not going to use the B word, but you can kind of apply that same hypothetical. Powell largely lived up to expectations, but the same could kind of go for some of the inflation data or even the economic data, where if it's still a little bit rocky and the bond market doesn't rally in a big way, then I wonder when we start to think about just how overdone we got and how we figure out where the next step is.
Yeah, and I think, you and I would say, like, yeah, it does seem overdone. I mean, it makes sense in any kind of textbook or any kind of past trading that you look at. But I think the Fed is looking beyond that, looking at the twin barrels of global economic slowdown due to trade or because of trade or in part because of trade. So it's kind of like perhaps not complete uncharted waters, but definitely more than just a mandate of inflation and jobs. It's something that we haven't seen in the mix for in a while, or really for a long, long time, and the impact it might have. And so I think the Fed is making every effort to stay in front of it without letting the market dictate how many cuts we're going to have or when the next one's going to be.